Hey, Will. How are you, buddy? Can't hear you. Waiting to be able to hear you. All right, let me try it again. Okay. Will's going to call us back. Okay, thank you, Mauricio. So I'm going to be speaking to Will Hunting, getting his mic set up here. So we had a little counter trend call in Euro Aussie this morning I took. I'm still looking for a correction in the dollar back to the downside. Have a couple of short Swiss on, short yen from Friday, and trying to bottom pick Kiwi. Kiwi looks like it could be vulnerable. All right, Hutch. Okay, Hutch. Let me look at that link after the interview. Hi, Will. How are you?
Hey Dale, how's it going, fella?
Good. Nice to have you back. It's been a while. I hope you've had a good summer. We're heading into fall. A lot of dollar bulls out there, Will. I was interested in talking to you and hearing what you think with the unanimous sentiment in the euro. It's worked for people to be short euro. Uh, we had a gap down last night. Do you think that we're nearing some kind of exhaustion phase here and that the shorts might be squeezed before we trade sub 130?
I think you know how just a little while ago everyone was saying the volatility left in the market,
Right, yeah. People
and
were complaining
things
about
are
it. Yeah,
yeah, and things are really slow.
yeah.
Um, when you're looking at this chart of Euro USD, it kind of makes you wonder what the heck they were talking about, right?
Yeah.
I mean, it does look like a fairly secular move to the downside. Not very deep pullbacks visible anywhere
No,
there.
it never really
Uh,
got even like a 38% retrace. I mean, that best rally happened in June, back towards 37, and that was it.
sure, I mean, she consolidated and she carried on, right?
Yeah.
Small consolidations and carried on. And I mean, you're the market veteran, Dale. Doesn't it bring back memories of 2003, 2004? Only that time the euro's headed in a different direction. Small incremental moves, but secular. So it's not the kind of volatility that we got used to during the GFC, during the Great Financial Crisis,
Right.
but it's not out of sync with her historical uh, modus operandi, with her historical MO. Um, what I found interesting with the euro and particularly this week, I mean, one of the things I started doing, and this has been going back a little while now, was that as soon as that kind of lull came in the market where things had appeared that they were slowing down a little bit, usually I've kind of come here and I've made huge predictions and said, euro back at parity, pound at 180,
Right.
or this instruments, and I'm always talking about levels which are,
Attention getting.
hundreds or
Attention getting.
yeah, hundreds or thousands of pips away.
Yeah.
But from a trading perspective, one of the things that we've been doing is just focusing a little bit more on the intraday moves and saying, well, you know what, if we can pull out today's ATR, if we can pull out 60 pips today or 80 pips today, that'll be more than enough. And we've kind of satisfied ourselves with small intraday technical moves rather than at this stage trying to predict the next big swing.
Okay, so with lower volatility, you've lowered expectations and
We just
lowered
lowered
and lowered time
expectations.
frames, lowered everything.
Not necessarily lowered our timeframes, but uh, I guess the expectation of how far that band is going to stretch before price stalls again. And every time the price stalls, there's a risk that there might be that reversal and there might be that counterflow move. Um, Hence my interpretation of what's happened with the euro this week. I use lines a lot, and I like drawing trend walls,
Right.
which I suspect are going to behave like support and resistance. And what happened over the weekend was that we had this gap down in the price action. So I've got the screen share active. I think that
Yeah,
should
I
be coming
see
out
it.
good.
If
Yeah.
now the
So
Swiss filled the gap it left. Okay, I've been
yeah,
noticing the Swiss not having the same type of potency on its move that the euro has had on the downside,
sure.
the Swiss to the upside.
Mhm.
In my study of gaps, it's possible there's two potentially bullish scenarios.
Mhm.
One is that it could be an exhaustion gap, and the other
Sure.
could be that we grind around down here and we gap up and leave an island, which would be a pretty rare event in currency trading, wouldn't it? Island tops, island bottoms.
Sure. I actually favor the second scenario because what I'm doing is actually marrying this with my tape reading levels. So I consider the weekly open to be priced at the market close last week, and that is coming in around the 33.40 handle.
Yeah.
And so what I'm seeing is that this week actually opened down,
Right.
and we are in a bear week. I have no reason for contemplating even buying unless we get some kind of support structure created above the 33.40 price handle.
Interesting
So
area. Okay.
yeah, so long as the price remains below 33.40,
Okay.
I'm quite happy to maintain a bear bias on this instrument. And actually, what I'm looking for is a second scenario. I'm not looking for a gap fill here. What I'm thinking is the second scenario that you mentioned, that sometimes the gap means exhaustion, but other time it can reflect an acceleration
Right.
in the sentiment of the preceding
Yeah, it
trend.
could be a
And
breakaway gap or runaway gap. Those are the other
that's
two.
right. So from a price action technical perspective, support, support, support,
Right.
and you know what? She's just kind of jumped that support, right?
Yeah.
So I think there are a lot of buy orders that have been missed there. They've not been triggered. The price has just jumped those, and so long as the price now remains below that wall, I have an active short in play as it is. It's a trade that I did overnight, but so long as the price remains below the wall, I'm quite happy to look to just further to the downside. And you know what? If that gives me 20 or 40 or 60 or 80, I'll be happy with any of those numbers.
I understand.
Right?
Yeah.
Okay, but from a bias perspective, as long as she's below the wall, I remain technical short. And the only time I will reconsider that bear bias is if it happens that the price is
Back above
above
340.
33.40 and the week takes on, or the weekly candle takes on a bullish direction.
Okay.
I just wanted to mention something very quickly, if I can,
Sure. It's your show,
which
buddy.
is that look, it's just a mistake that a lot of newbie traders make, which is when they're looking at a chart of Euro USD like this, because the price action has worked her way down to the bottom of the screen, you can't see any space below the price. And so the automatic assumption tends to be, we're at the bottom, therefore the price is going to end up moving higher. Right? It's one of those subconscious things that viewing a chart active, it's a trick that the chart plays on your mind. It fools you into believing that because there isn't any space below my screen, the price can't possibly go further. It's actually a very incorrect way of making analysis, and one of the things that helps.
Yeah, anyone who trades because of where a range
is just to do something like this.
Yeah, anyone who trades based upon what the range looks like and near the top or bottom of their chart, needs to close their
I mean,
account.
that's it. I find it useful to do
Yeah,
something
there
like
you go.
this.
Yeah, you just
Right?
expand the
Here you go.
ranges.
All right.
Yeah,
So, if I move this now, if I move the screen here
yeah,
and I said, is the price going to go up or down? Right. I don't know if you want to do a straw poll. Right.
yeah.
But is the price going to go up or down?
Well, I know a lot of people looking
Because
for sub 130 around 127. There's some fib targets down there.
that's right. So when the candles are at the top of the screen, everyone kind of imagines that everyone imagines that the price is going to move lower just because you can see that empty space.
Yeah,
And when the candle's at the bottom of the screen, everyone imagines that the price can only move higher, just because that's where the empty space is. So there's just something. I like to caution everyone on it, but usually it's because I'm cautioning myself.
yeah.
Yeah.
Okay.
So
Self-talk.
yeah, it's one of those things that I've fallen in that trap more often than I care to care to mention, right? So I'm always aware of it and prevent myself from falling into that trap. I like to prevent everyone else from falling into it first.
Pretty nice decline in cable as well. Will, is the picture similar to what you have in euro? Same type of scenario.
Cable's a little bit different and more because of where she's at, right?
Yeah.
It's more because of where she's at. So there are a couple of things which I noted about cable. First off is that as far as the market expectation is concerned about a rate rise in the UK, there is no change in that, and I think the market is still expecting that the Bank of England will raise rates before the Fed. I think there's very little kind of doubt about that in the marketplace now. And the order always has been, and I think going back almost 6 months, or actually 6 months, 8 months even, everyone said it would be the Reserve Bank of New Zealand, then the Bank of England, and then the Fed. And I think that everything is on track for things to happen in that particular order. Now, you are the forex stop hunter, and one of the things that you would have noted just before the Reserve Bank of New Zealand raised their rates was that the price of Kiwi dollar, it kind of just fell and fell and fell and fell and fell. And then they raised it, and during all of that period, everyone was talking about the Reserve Bank is going to raise their rates. The Reserve Bank even announced in their December meeting, look, we're going to raise rates in the next couple of meetings, and within the next few meetings, we're going to be raising those rates. Right? They even announced it. But the day that they raised their rates, the Kiwi dollar accelerated, and that's when it went and hit new highs. And I think that there's a little bit of a play going on here, which is that it's not unreasonable now, considering that so much of that rate rise has been priced in. It's not unreasonable to expect that the pound dollar will stall around these levels in the mid 60s, and I think maybe even push down towards 64, inside the 63 handle possibly. But any kind of sustained stall at or around these areas, and so we want to see some kind of a rounding structure, ideally.
So it's got to do some work. It's got to do some work here.
Yeah, it's got to do a little bit of work. Then we're looking for some kind of rounding structure,
Yeah.
and then we can look for a resumption of the bullish momentum. We've got a election coming up next month here in the UK, so devolution. I think that's going to create some minor tremors in the pound and the pound crosses leading up to that event. Certainly on the date of the event, someone's going to have to correct me if I'm wrong, but I think it's September the 19th.
Is this for Prime Minister and all of Parliament?
Oh no, this is so the United Kingdom is England, Scotland, Wales, and Northern Ireland.
About Scotland's independence.
That's right. So so it's a Scottish independence referendum, and whatever they decide in September, it is going to have some ramifications on the pound, and we very much suspect that the market will react to that. So there are some fundamentals in play here. First off is that kind of pattern that we saw leading up to the Reserve Bank of New Zealand raising the rates, where the value of the Kiwi actually depreciated up until that event. And so maybe we're seeing something similar here on cable. But I think that that independence vote's going to be a bit of an issue, and that could give rise to some kind of untoward reaction. So some caution there. But if we get some stabilization around these levels, then why not to kind of looking for that next bull wave on cable. We'd want to see that stall first. We just want to see that stall first, and if the stall is there, then there's no reason why not to be buying. I've actually started charting cable, looking for buying opportunities. So toward that end, I have just one trend wall which has been marked. So this is connecting support and resistance. So I took the resistance here that goes back to April. I found support and resistance inside of this cluster here that goes back to June, and it was just interesting that we had such a precise kind of reaction when the price gapped down, hit the wall, and stalled.
Yeah, it came right off
it. Just kind of flirted. Yeah. Right, so quite a sharp reaction.
Yeah, filled the gap in a heartbeat, unlike the euro and the Swiss did, but it took some work for the Swiss to do it.
Sure,
So that's a sign of relative strength, in my view.
Yeah, so I mean, I would look at that wall and I'd think there are buyers hanging around that wall, looking for that wall to hold, and that wall defines the buyers for me on cable. If the price goes and collapses under the wall on a pullback, you just sell the kiss sell the back test and look for an acceleration to the downside. But so long as the price remains above that wall, any subsequent touches on the wall, and if you're aggressive, you'd go at the wall. If you want to be conservative, wait for an M15 or an M30 to turn bullish in your favor and then get involved after that. But I think that there is some potential here on GBP USD. And I'll be looking for the bulls to kind of start getting involved here. Coincidentally, we're back at where we were at the beginning of the year. So the yearly candle on cable is neutral now. We're in perfectly neutral territory. 0 pips up and down for the year.
Interesting.
All of those gains in the first 6 months have been wiped out.
Yeah. Okay. What's your view on the yen in here? You got some of the bulls coming out of the closet after the last run we had to above 104 in the yen. Well, a lot of the people have been talking about 108, 110. They have more confidence that is in gear. I had targets up around here. I've turned neutral to short-term negative. Where are you at on the yen? Do you have a view?
I was hoping you weren't going to ask me about this.
Well, we can skip it.
Yeah.
Want to skip it?
But what it is that I haven't actually taken a serious yen trade or a trade where I was looking for a significant trend. I took a short on euro yen last week. It was an intraday technical play, and it paid out fairly well for me. But USD JPY, GBP JPY, Euro JPY, they seem a little bit out of sync right now. And while the pairs are out of sync, I think that there's going to be room for some kind of arbitrage between the pairs. But on their own, it's a very, very difficult call.
Yeah, it's also out of sync with yields. There was a real tight correlation with yields, and yields have made new lows or recent recovery lows in 10 years, and the yen should be trading 99 right now instead of 103 and a half, 104, based upon its correlation with 10 years.
Well, she opened the year at 105.40, 105.30 around that price handle. It's the blue horizontal line I've got on my screen there, and if you're looking at the USD JPY, we can see she's kind of she's headed back towards that direction. If it happens that you get a break up through 105.50, yearly candles turning bullish. So after spending the first 6 months below, the yearly candles turning bullish. The only kind of general sentiment that I have about the yens is that I think that the tide has changed on the yens, and I've said this several times throughout the last couple of years that buyers will be winners. It's just a question of whether you get risk definition or not. All right. So. And we're seeing that on USD JPY, but right now I don't have a technical that would allow me to initiate a play. If we looked at GBP JPY, it's a similar kind of thing. From the beginning of the year, she corrected quite deeply. At one point, she was almost 1,100 pips negative on the year.
Right.
And if we're looking now, she's just 200 pips negative on the year. But what is interesting, and this is what I was talking about, the correlation, is the Euro JPY, all right, which is close to the yearly lows. And in fact, just a couple of weeks ago, she set a new yearly low at 35.60.
I didn't even notice.
Right?
Okay.
She is 900 pips off the yearly open.
Yeah.
Right? 900 pips off. So USD JPY doing well, GBP JPY doing well, Euro JPY doing not so well.
Yeah, interesting.
That was the level at which I played my technical short, you can imagine, right? So it's just, it's not a yen story anymore. It was a yen story. It was a yen story when all three of these were accelerating in the same direction at the same time.
Good point, Will.
But I don't think that this is a yen story anymore, and that's why. All right. So now, in terms of the kind of wild, out there, headline-seeking, attention-grabbing analysis, I mentioned arbitrage, and what we're kind of seeing is USD JPY up here, GBP JPY up here, and we're seeing Euro Yen down here. And what's going to happen is that either this set is going to collapse and catch up with where Euro JPY is at, or Euro JPY is going to accelerate and meet up with where GBP JPY and USD JPY are at.
Which do you think is going to happen? You have a bias. I know you're a biased guy. Come on.
Yeah. Okay. All right. So I'd look at it from a support resistance perspective, and I'd be doing something like this.
Yeah.
Right. So there's my support.
Yeah.
There's my resistance. There's my support, and I've got resistance.
Yeah.
Resistance. If I get something like that, I would look at that as a support resistance flip, and then I would be looking to buy 38 handle, 37.70 handle on a pullback. Once the price has broken clearly through it, I think that there is room for Euro JPY to move higher.
Okay.
But as it stands, based upon the current price action and the fact that she's clearly below the resistance, if you did anything other than to short the instrument, you'd be stupid, even if you were proven right.
Okay.
Yeah.
Okay.
Right. You're below resistance, so you could buy it and say, "Hey, look, Will was wrong," right? But if the instrument fell, you did something bloody goddamn awful that you should have never done, right? Which is to be selling below a resistance. So, I'm not aggressive on this. It's not. I know a lot of people are saying, "Well, long, and it's got to go higher," and I'm all for that. But I'm saying, let the price action confirm that first, and then it becomes tradable. So long as she's hanging below that 38 price handle, I'd exercise caution going long on the instrument, and I'm quite happy to use my technicals to look for short plays rather than to be looking for bullish plays on the instrument as she stands right now. And there's no reason why everything can't collapse together, right? So you see weakness in GBP JPY, USD JPY, and at the same time you see further losses in Euro JPY. So there's no reason why that can't happen, right?
Okay.
But
the Aussie has been pretty stubborn, Will, during the recent bout of dollar strength. any view? I know you were right about looking for a substantial peak in the Kiwi last year. That was a great
Yeah.
call, finally manifested. And wondering what your thought is on the commodity currency complex here.
Sure. Well, you know what? Let's go to the Kiwi first, actually, just quickly, as soon as you brought that up, right? Which is, and as you can see, I haven't got a heck of a lot charted there, except for that broadening structure, which we mentioned last year or something, right? But the reserve, the Reserve Bank, one of the things that they mentioned in their published statement last month or the month before, it was the last one, was that they said that they believe that the Kiwi has been significantly overvalued and is overdue a very significant corrective move. And since the time of that statement, we've seen the instrument fall. And I think we've got resistance now at the 84 price handle. We had support and resistance at that price level, and I have no will or desire to fight the Reserve Bank of New Zealand, even if it is one of the smaller reserve banks, right? Yeah. Even if it's not the Fed and it's not the ECB and it's not the Bank of England, but they do control the printing presses on the Kiwi dollar. Right? So I don't want to be fighting them, and I think it would be wise to look to be selling pullbacks on the Kiwi dollar. The only thing you have to be a little bit careful about is your transaction cost there. There is a significant carry still, and you'll be paying a significant overnight swap to your bookie. But it is worth charting her for the shorts, chasing the daily candles, chasing the weekly candles, looking for momentum to follow through, and not to be fighting the Reserve Bank of New Zealand. No way. All right. I think they've kind of made their intentions about and clear as they possibly could have. And I don't pay a lot of attention to calendar events. I'm not particularly fussed about CPI releases or sentiment indicators or purchase manager indexes or anything like that. But when the central banks speak, I always listen. And if there's anything that I've learned over the past few years, you would be very wise to do the same. Right? I'm sure you'd kind of agree with that. So Kiwi dollar, I think we should just kind of trade in line with the Reserve Bank, not seek to fight them, and we'll do fairly well about them with them. If you're worried about the overnight swaps and transaction costs, there are ways around this. That's one of the advantages of being in the retail market and being with retail brokers. You can get swap-free accounts with various brokers, including the one that sponsors your show. Right? So
we don't have a sponsor. We don't have a sponsor right now.
Okay. Maybe I might take up that slot.
Okay.
Right? I thought it was still sponsored by one of the big boys out there.
Oanda right? And FXCM both sponsored us at one time.
Yeah, right. So
you could get swap-free accounts at FXCM.
FXCM.
Okay.
They do that at FXCM too. They have, I think they charge 1 pip extra on the spread at the beginning of the trade, and that's it. So, if you're looking to be shorting the Kiwi dollar, Kiwi against Japanese yen, any of these instruments, it's kind of worth it. And you have to take advantage of all the tools which are available to you.
Yeah, lower transaction costs as much as possible.
Yeah, right. Yeah. So, especially if you're going to try and position trade that. Right. If you're going to be holding the trade over the course of a few days, that negative rollover, it can build up very, very quickly. Right? So I think that's something that has to be noted. Aussie dollar, I've shied away from her for a little while. What I'm looking at the moment, as far as the Aussie dollar is concerned, is the is that we have quite a keen support that's been established at the 92 price handle.
Yeah.
Right? So that's the 92 price handle. And although I would like to see a resumption of the bear trend in the Aussie dollar, again, confirmation of that first. And the confirmation to me would be a breach of that support, and then on a pullback, you can kind of look for support to turn resistance.
Yeah.
And I think that will give you technical grounds to be shorting the instrument. Before that event occurs, I think, in fairness, you've got to say the bulls remain in charge, right? So if the bulls are in charge, there's no point shorting it. If you're going to be doing anything, you ought to be buying. But I have an interest in shorting it. I think it is an instrument that can go lower. I think we're going to head back into the 87 territory at some point, which does give us a good few hundred pips to the downside. But we need to get that support resistance flip taking place first. Once that's happened, it will be a very sensible decision to be initiating the shorts. I don't want to try to do it ahead of that event, right? So it's an event-based trigger there. If the event happens, we'll take it. If not, we're quite happy to sit on the sidelines, actually on a lot of these instruments right now. Over the course of the last few weeks, we've been trading maybe 1 or 2 trades a week.
Mm-hmm. Okay.
And each time, I think the best one kind of gave around about 120 pips.
Mm-hmm.
But you've been satisfied anywhere between 60 and 100 pips. We've been quite happy with that. So just been playing it intraday. Until the ranges break, you don't want to assume that they will.
Okay, well, I'll tell you what, I'm happy with what you provided us with today, Will. Some great looks and some great areas, key lines in the sand in several of these pairs, and as always, you gave me some clarity on a few of these instruments. You want to show your website and how people could follow your work and possibly get involved with you? Sure.
I'll just give you a very quick glance at the website. It's undergone a lot of it's undergone a lot of changes over the course of the.
Are you in Wikipedia yet?
Only if I edit my own entry.
In my imagination, I am. Okay.
Yeah, only if I edit my own entry. But there's the website. There's wmdforex.com. There are 2 services which I provide. There's an online video course if you want to learn to trade price action and learn the techniques that I've used and developed over the course of the last 10 years. You're welcome to take a look at that. I also issue trade alerts and service where I provide weekly analysis with trade plans, and I update those trade plans and issue trade alerts during the course of the week. So if you'd like to subscribe to that, you can do that. It's actually an annual membership to the website, but there is a link for a trial subscription on here somewhere. You can click on that, try it out for just a month, and see if you like it, if it's something that works for you, and then you can decide to become a part of the crew after that.
It's like,
right?
Is it like the mafia that once you join, you can never leave?
Well, we've got members who have been with us for as long as we've been providing the service.
Wow.
So almost 2.5, 3 years.
That's great.
And I think that says something. So we must be doing something right.
All right. Well, you do plenty right, Will. It was great talking to you. Good luck the rest of the month into the fall, and appreciate you giving us some of your time today and some of your insights.
Hey, cheers, fella. It's always a pleasure.
Thank you, Will.
Cheers, Dale. Bye-bye.